Hello everyone, it's the Canadian Futures Trader here. Thanks for checking out this video. Before we get to the actual video itself, I want to do a quick introduction. This video that you're going to watch is actually part of a larger series I've put together for futures traders. I started out futures trading just a few years ago, and I found it really difficult to find good information to learn how to trade futures. So what I've done is put together this completely free course. It's on my website. There's a link down below. There's no upsells. There's nothing for sale on my website. So just come absorb the information. If you like this video, definitely encourage you to check out all the others in the series as well. On top of that, I mean, there's just a ton of written content and it's only going to grow. I'm only going to add to this over time. This is my way of giving back to everybody. It's all the information that I had to figure out on my own when I first started, and there's no reason that everybody should have to go through that process, and there's no reason you should have to pay for expensive courses that really don't teach you much of anything outside of the basic. I'm going to leave you with that. Enjoy the video. In this video, this is another example of what I call the catch-up. This is actually a video I actually put on my YouTube channel previously, so I walked through this trade. I will link it down below if you want to see the original video with the commentary on the trade, but I'm going to specifically talk about the catch-up in this video that you're watching now. So what you're looking at on the left are the 30 years, in the middle are the 10 years, on the right is the Ultra Bond, my common setup. I'm already in this trade and is already wildly profitable. I entered at a price of $199.03. I'm long 15 contracts in this one, so big trade. The price action is already up at a price of $11.12. So, I mean, we're to the good, 3,700, 4,200, etc. I have a stop and I have a take profit in already, so we don't get to see the early action in this trade, but I can explain what happened. I entered this trade down here at the price of 03, and you can see it's basically in the range. You see the volume profile column here. It's dead center in the middle of where most of the activity has taken place this session. Now, at the time I entered this trade down here, the 10 years and the 30 years were already making a move to their high of the day. I believe the 10 years were right about here at 175. The 30 years, I'm just speculating, but I'm guessing they were about 20, maybe 21. And all indications were that the pressure upwards was only going to continue. I mean, I have the video almost positive, perfect example. You see here the ticker tape for the 10 years. Blue is buy, red is sell. This is all buyers. I mean, look right here. Almost 1,100 contracts traded at 7.5, and that pushed it up into 80. And now you have contracts trading at 85. It is all buyers in control of this market, and every indication that also means the Ultra Bond would eventually catch up. You had the 10 years and the 30 years pushing the highs. You had the Ultra Bonds, for whatever reason, hard to say, they were trading down here at 03. I said, you know what, this is a great opportunity, because if they do catch up, which is, of course, why I name it the catch-up, to the high of the day, there is so much profit potential to have here. Now, I mean, it would be insane if they actually got up here to 2.4, but as we can see, even just getting up several ticks, or in this example, they're up about 8 ticks already. It's just a huge profit potential. So I'm going to let this play. I honestly don't quite remember exactly where I get out of this trade. I will mention, though, when you're in this type of position, so I'm already wildly profitable, what I typically do is I have my stop loss, I have my take profit. The stop loss, obviously, is if the price did kind of spike down, I'm at least locking in some of this profit, but I want to give it some room and some range to play, because this is moving around in about a 2-tick, 3-tick range. I don't want to get stopped out and then have it bounce and move right on up, so I want to give it a bit of room, but I also don't want to give up too much profit potential. Likewise, I have my take profit set. If this thing just went flying like really quick up and then bounced back, we lock in this nice profit, assuming we get triggered. So there was actually a couple phases to this. So I'm already know that I'm in the good. I'm making money on this trade. Basically, what I'm trying to identify now is the phase where we either get stopped out or we hit this take profit because of a wild spike, or we just start to see things start to turn. Buyers aren't as aggressive, sellers start to come in a little harder, and we want to capitalize on as much of this profit as we can. So at this point, you know, we had a little bit of a movement up here, a couple ticks, so I'm moving my stop loss up. As well, I'm just kind of tinkering with my take profit. Again, I'm trying to keep it about 2 to 3 ticks above. but I also don't want to give up much profit. Now, this is fairly substantial profit. I'm trading a lot of contracts here. So every tick is quite literally about over $500. So at this point, I recognize, what? It seems like things are slowing down. And also, I'm going to pause this for a second. So why I move my take profit down, what you're seeing over here on the 10 years, again, a lot of times I'm watching the 10s and I'm watching the 30 years to make decisions on what I do with my trade in the Ultra Bond. For the first time, you're seeing a lot of sellers come down and hit the buyers. First indication, maybe they're done. The buyers haven't been pushing this up, only 95 contracts traded here. All of a sudden, you're seeing 25 sellers come down and hit the buyers. Little bit of an indication, okay, you know what? They've had enough. Buyers seem to have run out of steam. Sellers are ready to push this down now. As well, it might not even just be sellers looking to push it down. It's people that bought down here. And they recognize as well. They're basically doing exactly what I'm doing over here. As a buyer somewhere down here, or in my case, way down here at the price of 03, I'm recognizing, you know what? I think it's time. I think the train ride might be over. This is a good opportunity to get out and lock in a fairly substantial profit. So that's why you're seeing me move my take profit down here. So it's all about, if I was to recap this, and I'm going to let this play in a second. One, it's about recognizing the context of the situation as to why I entered. Buyers on both the 10 years and the 30 years were pushing things up. Ultra Bond had a lot of room to move up as well, and that's exactly what played out. I mean, look where it is now. We've got a nice 11-tick winner currently, and if I actually get filled at the price of 16, that'll be a 13-tick winner. And second, once you're in the trade, don't just cross your fingers and see what happens. Manage the trade. So I'm managing where my stop is and where my take profit is, and I'm trying to squeeze every bit of juice out of this trade that I can. I'm going to let this play. If you watch here, what you're going to see is the buyers do push this up. I get filled for the price of 16. And right there, everything disappears because the buyers come in and take it out. So another fantastic example of the catch-up. That was probably a more extreme example. Usually I'm just trying to get, maybe 3 to 5 ticks on a catch-up. That one ended up being about 13 ticks, which is phenomenal in the Ultra Bond. I have another video as well with a catch-up on a different day. It's a little bit more tame, but exact same play, guys. It's really just rinse and repeat. You look for the opportunities. When you see them, enter the trades, you manage the trades, and then do it again. Thanks so much for watching, and I'll see you in the next video.